Hey everybody, so today I wanted to make a technical analysis video and I haven't done one of these in a while, and what I wanted to talk about was rising and falling wedges. So we're going to take a look at the S&P 500, SPY, ETF. So I'm just going to start by going on the 1 year time frame. I'm going to zoom out a little bit and then I'm going to draw a trend line. So this trend line is going to be more of a resistance trend line. It's going to capture most of this data right here. Now I'm going to find a support trend line right here, and I can see a pretty clear one. So here we can see that this whole down move was going into a falling wedge. Now a falling wedge is basically when we hit resistance and then we go back down to hit support. So here we have us hitting resistance right there, right there, right there, right there, and then again and again, and then we hit support. So support, support, and support. And this isn't like a clear bounce, but I would say it's close enough. And then what eventually happens is that we keep falling, 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 and then we have this massive breakout. So when we have this breakout, we could see something like this. And this is going to be a rising wedge. And this is actually a pretty darn tight rising wedge, which is actually the opposite. Instead of falling, we're rising. But the concept is still the same thing. You know, we're hitting support, we're hitting resistance, we're hitting support, and we're hitting resistance. And then we eventually break down. So now, when you actually look at this in the grand scheme, we have this one wave that's going down, we have this one wave that's going up, and now we have another wave that's going down. But we can't necessarily say that this is a falling wedge, because right now, to me, when I'm charting this, looks like a downtrend channel. Now, a downtrend channel is essentially when we're not in a wedge like this. It's just going straight up, straight down, straight up, straight down in this channel. So in this like a rectangular pattern. So to me, these are a little bit more dangerous, but this could turn into a wedge. So if we do want to see a wedge out of this, what we have to see is tightening price action going on right here. So this whole thing could tighten up, it could coil, we could fall all the way down to maybe around 400, and then this will look like a falling wedge, and then we'll have this massive breakout to the upside, maybe like one of these right here. So that could entirely happen, but right now this isn't a falling wedge, this is a downtrend channel, and I need to make that very clear distinction. So if we go back in time and we look at this period after the stock market crash, we were in a channel. So this is not a wedge of any sorts. As you can see, we're basically moving up and down in this rectangular pattern. This is a channel. So now we can go back further in time, and we can see more instances of rising and falling wedges. So for instance, we can look at this right here. And we could say that this was a rising wedge, and then we had this breakdown. And maybe this could have been part of a larger rising wedge. Oops. And maybe we could look at it in this point of view. Okay, if we look at it from this point of view, it was actually one large rising wedge, which fell to this breakdown right here. So maybe this breakdown We'll see if this breakdown is just a trend channel or a falling wedge. So in my opinion, I would see this more as a trend channel versus a potential wedge. And you can see it's very clear right here. So we have these areas of support, areas of resistance. But then we did break out of this downtrend channel. And then we'll see, is this right here a trend channel or is it a rising wedge? I would see this more as a trend channel. Now, sometimes with the rising wedge, in my opinion, this is just my personal opinion. So when we do see rising wedges, I feel like you're more likely to see this when the market is on edge and there's something that could really take us down. So sometimes you see these bear market rallies, and then you could see something that's setting up to be like a trap, like a rising wedge, versus something like this, where we're having this nice steady rally, and then all of a sudden we have this breakdown. That could just be something like a sudden event that just causes us to break down. So it could be earnings or some economic event, what have you. But I generally think when we see longer term rising wedges, then that's kind of like the market walking on eggshells, and we keep going higher and higher, but we don't necessarily see like the good reasons for us to go higher. So that's just my opinion right there. I could totally be wrong on that, but that's just how I see things. So it's more like this bearish optimism that maybe we're going higher, but there's also this trap that could happen, and this decisive kick in the ass. So always look out for that, and I hope this video was very helpful in getting you to distinguish what a rising, a falling wedge is, and what a trend channel is. And I hope you enjoyed.